let's talk about investment stuff. Um, so Shreya, the question that you sent me in advance specifically was around rebalancing and, when to do that and so forth. I wanted to ask you as a follow-up. So I take it that rebalancing is your responsibility. Like you are invested in, say, like a few different index funds. Is that right? Or are you invested in single stocks, or what are you
So,
concerned about?
so currently I have a target date fund, and I mean it's a mix. And but then my target date fund is again like more aggressive because my retirement age is like further off, and I also have some amount of money in like bonds. So I'm just wondering like. So I was just so that was my question, like in such times is it better to have like a more conservative portfolio than having something which is more aggressive?
Okay, so if I heard that correctly,
Mhm.
all your investments are in a target date account, which is a mix of stocks and bonds, or do you have additional bond investments aside from the target date?
I have additional bond investments as well.
Okay, and so, but you came to this with like a certain asset allocation in mind, is that right?
Yes.
Okay. So the particular facts of you having part of your money in target date stuff and part of your money in something that you're more self-managing makes this a little bit more complex because so I invest all in target date accounts right now. And the great thing about that is that you don't have to do your own rebalancing, and they have a set, schedule, or, they'll review it when the allocation goes off by 5% or whatever. Does everyone know what I'm talking about when I'm saying rebalancing? Okay. Laura says no. So for asset allocation, when you first, start investing, ideally you'll have in mind, okay, I want a certain percentage of my portfolio in stocks. I want a certain percentage in bonds. I want a certain percentage in cash, alternatives, something that's appropriate to your age, to, the time to your goal, to your risk tolerance. And, for someone who's many, many years until retirement, who has a not very conservative risk tolerance, that might be very, very heavy in stocks, 80 to 100%, probably in that range. Um, so what target date funds do is that they sort of take a good suggestion on average for people who are retiring by a certain year, and they manage this asset allocation for you. So it usually purchases maybe 4 underlying index funds and has the right percentages all divvied up. So the great thing about this is that it's a completely hands-off thing. I know for myself, I've had the opportunity in the past to do my own rebalancing, and I didn't do it. And I just know that about myself. And so I'm happy to pay a higher fee and have that off my plate. But if you are in charge of your own rebalancing, it is something that you need to be concerned about, or, be tracking kind of in a period of volatility like we're in now. So the general suggestions around rebalancing are to bring your portfolio back into your ideal, target, um, once a year, once a quarter. I really haven't seen anyone recommend once per month, even that frequently. So maybe once per quarter. So you could do it on a specific timetable like that, or you can do it on the basis of your asset allocation getting out of whack by a certain degree. So if you wanted 80% stocks and now your portfolio has 75% stocks, or probably less, then you would sell and buy to rebalance into the percentage that you want. In a time of super volatility, I don't think that's as useful of a metric because it could change day by day that you could be off by 5%. And so I still wouldn't do the rebalancing anymore. I mean, even once a quarter, I think would still be enough, maybe once per month. But so anyway, that's something to look at. The other thing is that you don't actually have to necessarily sell and buy to do rebalancing. You can just buy, if you're still adding to your investments, you can just buy whatever that, too low target category is. So in this case, it would be stocks. So in your case, Shreya, you would be like buying your target date fund instead of buying more in bonds. Because, well, I don't know, but probably that's what's happened is the stock portion has declined more than the bond portion. So that's the idea, is if you're still adding to your investments, you can use the new money that you're adding to do the rebalancing, not instantaneously, but over time. So the good thing about rebalancing your asset allocation is that when one market sector like stocks does decline greatly in comparison with another one, let's say bonds, um, rebalancing forces you to do the thing that you don't want to do emotionally. Right now, you probably, if you're a normal person, don't want to be putting more money into stocks because we're seeing this decline and we don't know where it's going. But rebalancing would say, well, it's time to buy more stocks right now because your portfolio percentage is too low. So that's the idea there. Shrey, did you have any more like follow-up questions around that?
Um, Not really. I mean, I'll think about it, and if a question pops up in my mind, I'll ask you as we progress. Yeah.
Sure. Anyone else have other questions or comments or things you're feeling, Laura, around investing? Yeah, go ahead.
Yeah, like just because so much has been like up but mostly down like in the last week, I don't know, it seems like a weird time to buy stock right now. Like I'd like to think it's not going to go down more, but that would seem like wishful thinking. So are you saying this is something to think about right now because like the time is of the essence, or is it like hold off and in the next month or 6, or I don't know, I guess that's, there's like a, what kind of time frame should this be relevant to?
Yes. So I my position as both personally and as a financial educator, um, my position is to never try to time the market. Yeah, it's going down. Probably it'll keep going down. Um, but the thing is, you really cannot predict when the um, when the recovery, because we think unless this is a society-ending crisis that we're facing, it's probably going to, I mean, it's going to come back, right? Like you can say if the future is anything like the past, even in broad strokes, we will go on from this, right? The market, the economy. So the idea is that you have no idea when the recovery will happen. And if you go based on your emotions about it, you're always going to lag what the market actually does. Like you're not going to believe when you see a slight, coming back up of the market. You're not going to believe that it's for real, and no, it's just going to decline further. And basically, if you spend time either not continuing to invest the way you have, or if you pull back and you sell a bunch of stocks and you have money in bonds or cash or whatever you might do, um, chances are you're going to miss you'll miss the recovery, or you miss the really steep or the important part of the recovery. Um, I mean, if you think about what happened in like the financial crisis of just 10 years ago, like the recovery happened very swiftly starting the beginning of 2009. I mean, it's always darkest before the dawn, right? Like it's always the lowest before it starts going back up. So my position, the one that I'm again taking personally and as an educator, is to stick to whatever your plan was. Hopefully you had a plan going into the whole investing journey. Hopefully you had a plan. Stick to it unless something else has happened in your life that changes the plan. So unless you lose your income, or you feel very insecure in your income, or unless you realize, oh, wow, I had no emergency fund and that was not a good idea, and now I need an emergency fund. That's okay. That's an okay reason to change your plan. But other than that, like stick with whatever your plan was. So for most people, that's dollar cost averaging. That is, I'm investing money with every single paycheck that I receive. It's a certain percentage or it's a certain dollar amount. And this is what I'm doing. I'm continuing that set schedule that I've had, I have a rule about it and I'm just going to keep following that. And yes, I may be buying as the market declines. I mean, the market's already declined, right? The time to get out was 2 months ago. So now you're buying stocks on sale. You can think about it that way. And yes, they may go further on sale before the recovery happens. But, again, if the future is like the past, there will be a recovery at some point, and you don't know when. There is this, sure. There is this excellent, it's so weird, but I would listen to it if I were you. It's this guided meditation for when the stock market is like declining by Jim Collins. I think you can probably find it on his website, which is jlcollinsnh.com. Yeah, he made a guided meditation around stock market volatility. So listen to that. It's like a few minutes long and it like weirdly helps. Okay, any other questions? Or yeah, Pippa.
yeah, I saw a great tweet. I don't know, a week ago at this point, not sure anymore about how time passes. But it said, don't touch your investments and don't touch your face. Like we're just keep going with trying to have a good outlook on it. And the strategy that I've had is like for the rest of this semester, I'm going to continue buying, like I put money in every payday. And when I know if I'll be, what my contracts will look like in the summer, I'll reevaluate that if I want to, put less in or not. But yeah, trying to think about it as on sale and then not open that app every day. So
I think that's really key. Like I normally like kind of look casually at my investments a few times per month, maybe a few times per week. It used to be something I was looking at like multiple times per day, which doesn't actually make sense because I was in index funds and they don't update. Um, anyway, I told myself, don't look this month. Like I record my net worth on the first of every month. So I did that on March 1st. I will look again on April 1st. I'm not going to look between now and then. And again, just because there's so much volatility also, like I have no idea what's going to happen by April 1st. I mean, I assume it'll be down, but whether it's 10, 20, 30, 40, like whatever percentage it is, it's not something that I need to track on a daily basis. Because again, the idea, as you were just saying, is that you're not making any decisions around it. You're not making any changes. All you're going to do is stick with the plan that you had going in, unless, again, some new information has come to light that would change the plan. Yeah, any other questions or comments, like what you all are doing or feeling around your investments? Yeah, Mimi.
So I just want to share a comment that one thing that helps me not look is that a lot of my investments, which are also mostly in index funds, I like check the box where you reinvest the dividends automatically, so that when the market goes down, I know those dividends are um, getting more stock on sale, and that kind of helps psychologically, So yeah, just wanted to share that.
Yeah, totally. Letitia?
Yeah, I have been using Acorns, and like I put in a certain amount every month, and I actually am one of those people who didn't really have a large emergency fund. Well, I have multiple emergency funds, one for my house and then one for my just one for my life. And the one for my house I kind of been putting off. And so when I saw, and I just so happened to open the Acorns app maybe 2 weeks ago, and I saw that it lost like $200. So I decided that I should build my house emergency fund so that I at least have a good stash there. But I'm going to reevaluate, especially after this conversation and hearing these, like everyone's story. I'm going to reevaluate and put some money back, or I don't know if it's wise to take money out of my emergency savings to put back into the stocks and the investing, or I don't know.
So this is the other side of the coin, right? Like if you're convinced it's a buying opportunity, do you put more money in right now? And as I said before, I am like, stick to your plan. And if your plan has changed because you said to yourself, well, I don't feel secure, I need more in my emergency fund, that's totally fine. But there is, so okay, if you've heard I think it's a Warren Buffett quote, but like, be fearful when others are greedy and greedy when others are fearful. I've always been confused by this because I have sort of my observations of the world and like the stock market, and I have my observations of the personal finance community. And I can tell you some people in the personal finance community are frothing at the mouth to like get in right now. And it's so confusing to me because I can't tell. Some people are scared, some people are greedy. And that's why I still want to stick to my like, nope, I have my plan. Like it's regimented. We have money in cash right now that we could invest, but one, it's not part of the plan. And two, personally, I feel really good right now that I have money in cash. That's house down payment money. So it's like, it has a purpose, but knowing that if all of our income's dried up, my husband works at a startup. I've mentioned this multiple times. So like if VC capital goes away, then, and he doesn't have a job, like we know we can live on that for quite a while. If necessary. So to me, I feel more secure knowing there's cash, and also I have my investing plan, and that's like my balance with it. And so I think if you kind of realize that you're either cash poor, or, you know, you don't have a plan for investing, but you have enough cash, so maybe you should, then like either one of those can be updated now. But I would not look at this as either a buying opportunity or a selling opportunity.
Okay.
Yeah, Lourdes.
So just sort of in that same vein, I was actually talking to my mother earlier today, and her brother, so my uncle, is very like business oriented, and he was telling her like, oh, you should just like invest everything now, like in the stock market, it's so low. And I was like, I told him, I was like, I have a plan, like, 'cause she knows I like have some investments and stuff, and like I have a plan, I kind of just gonna stick to that. And like you, Emily, I have some money in cash that I theoretically could add more into like my investments if I wanted to, but I think for now I'm just gonna stick with what I generally do and just kind of keep with that plan right now. Just since this is such a period of instability in general, like who knows like if I'll need that cash or if I'll want that cash at some point. So I'm just gonna stick with what I usually do.